Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at ticker symbol Root. This is Root Inc. They are a property casualty company. The stock is currently trading at $49, which you can see to the right of my head over here. Nope, over this way. We're going to see if institutions and hedge funds are adding or selling. We're going to see if the stock deserves to be $49. We're going to do some advanced charting on Think or Swim, just to look at some Fibonacci arcs and also just see where we can find some supports and resistances. Looks like I did have some charting done before. However, the company did do a split, so that does affect our overall old drawings. So without further ado, let's go ahead and hit the subscribe button, leave a comment, thumbs up, and jump on in. All right, so you guys can see everything. Just one major call out I'm seeing here. We, or I at least, see a bear flag. So let me go ahead and draw that for you real quick so I can show you exactly what I'm talking about. Um, maybe? Okay, so here is our flagpole right here. So that's our flagpole, that black line that I just drew, and here is our flag. One side, I don't have to make it that big. One side of the flag. Second side of the flag. So, and I happen to be right. So here's our flag pole. Here's our flag. Typically, this pattern leads to a move down. The not so most obvious area we're going to look for is resistance. I'm sorry, support, not resistance. So in terms of support, we do have some good support. I would say we've got a few different areas we could look at. So we got 42, obviously, but with this move that we might see, it might go lower. I'm thinking 38 to start. And that's just my opinion. And that's on the daily. I don't typically like to look at the daily. I look at the bigger picture and then I go from there. What I do see though, and you guys can see it too, yep. Look at this insane amount of buying for January, February, March, a little bit of selling in April, buying in June and July. And so far for August, we're selling. We're about 18 days into August. Um, we've got a nice little move up. This was a $6 to $85 in a matter of months. Whipped down to around $40, whipped back up to around $83, and now we are at 49. It looks like we are kind of with the Bulls at the moment. Strength is a 44, but we can't really tell if it's taking a breather here and gonna go back up, or if it's gonna continue down. Money flow looks like it is going down, and our relative momentum indicator actually has come from the bottom of the ocean to almost breaching sea level. So it looks up pretty neutral at the moment. So overall, neutral. I think we want to watch the $38 level for support. I think a secondary support we want to take a gander at is 25. All right. So let's take a look at financial data points. So, I mean, obviously, this is absolutely incredible. You could see the company was kind of stagnant for 3 years. 2023, 455 million. 2024 trailing 12 months, we're at 854 million. 2024 looks like we might just double 2023, which would be crazy. EPS going the right way, nice and up and to the right. Shares outstanding, we did have 14 million in 2019. Fast forward to 2023, 14.5 million. However, 2024, 9.5 million shares available. So this is a very low float stock, very volatile. I mean, 2023, 14.5 million shares, 2024, 9.5. That's a pretty big move. It just shows a lot of demand. They are not profitable at the moment. They do have some debt. It does not look like they're addressing it at the moment. Quick ratio, we will look and see how they're doing down below with our assets and liabilities. Our price to earnings, there's no data here. Forward PE is 24. Gross margins not showing anything. We'll take a peek. Very low flow institutions. Looks like they are buying. Again, they're not profitable. Sales past 5 years, 125+%. EPS negative 15.84. I think that's heavily attributed to the year 2020. Just crazy right there. Next year EPS 181% positive, so that's pretty incredible. Let's run our projected stock price calculation. Maybe. Come on. Okay. So we have a market cap. It's under 1 billion, so we're actually not going to include it. Income is negative 83,800,000. Sales are 854,200,000. And we are going to look at the cash and the debt and the shares in a moment. So, I mean, this is actually looking not bad. I'm a little concerned. We do have a bit of debt here. No quick ratio or gross margins are showing. So we're going to figure that out together. Okay, so Q1 this year, they did 254 million. Q1 last year, they did 70 million. Huge increase. Good for them. Revenue for Q2 is 289 million this year. Last year was 74. Humongous increase. But they are paying quite a bit more, actually. So where's our gross profit? There's no gross profit. How much are they selling? And what I mean by that, how much are they paying to market, advertise, etc.? There's nothing. We go to routers. Total revs. No. So this is interesting. We don't have a gross profit here. We just have total revenues. So we're looking at losses, claims, and reserves here. It only continues to go up. So they're able to charge more for premiums. Net income before taxes. It's actually getting pretty good. They actually might become profitable. When's their next earnings? Sorry for jumping. August 7th. So they already had. So 2025, they are likely to become profitable. No gross margins because they don't have that information. Looking down here, we see some good buys. This was probably pre-split though. When did they have their split? No, it wasn't. Oh, back in 2022. Okay. It was a 1 for 18. Interesting. Okay. So this was post-split. So these guys got a good deal. The CAO sold. We got options. I mean, there's no real red flags here. I was just taking a gander. Okay, back to our balance sheet. Let's see how much cash they have. Total cash, 668 million. $200,000. Debt. Total debt, 292 million. Come on, baby. 292 million. Was that flat? Where'd it go? 600,000. Okay. And let's just take a peek at total assets, 1.2 billion. Total liabilities, just 1.02 billion. So decent buffer. This is an insurance company, not typically, not a typical stock that we look at in terms of a balance sheet. Total debt is hovering around the same price, which is good. Liabilities are going up, which is good. I mean, it's not good, but assets are also following going up. So not bad. They're actually doing pretty well in terms of, yeah, no quick ratio. Keeping a nice buffer between their assets and liabilities. So that is good. So this is an insurance company, mobile telematics and technology platforms to segment individualized risk. I want to look at the website. I want to see if there is this property and casualty. So I wonder if that is car insurance. We'll see. Let's see. Learn more. So we'll let this load in the background while we continue on with our regularly scheduled programming. So we're going to take this and we're going to divide it by 9,500,000. We get a potential stock price of 120 doll hairs. It's pretty incredible. We have analysts target at 73, 40, 22, 13. Car insurance for good drivers. Let's check out your prices. I think I currently pay 130 at the moment. Okay. So $120 stock. I mean, it was their pre-split. So based on the numbers that I got, and analyst target being at $73 and we're at 49, we would think hedge funds and institutions would be buying right. So old data shows that institutions own 34%. New data shows, drumroll, 68%. That is a whopping 34%. That's a 100% move on ours. That's huge. Carvana owns some. Schusterman Interest sold 96%. SVB purchased 780,000 shares. Tim Alexander added 3%. SVB Drive Capital sold 94%. Canal Capital added 770,000. Silver Lake Group sold all 9 million shares. I am going to see if we have some representation from Vanguard and BlackRock because they are the behemoths. Vanguard has 449,000 shares. They added 16.5%. Their value is down though. Let's look at BlackRock, and I want to see Renaissance. BlackRock added 234%. Crazy. And Renaissance Technologies are always early. Let's see what they did. Renaissance. They sold 15%. I don't know what's going on right here, but they have 200,000 shares at the moment. You can come here and check out the different buys and sells. I mean, overall, this is a pretty good. Okay, so I'll go ahead and do this and see what it comes out to, and I'll let you guys know what happens. So we'll do that at the end of the video. But for now, let's go through here. We're going to start friggity fresh for a new drawing set, 8/18/2024. Let's look at the bigger picture here. All right. So I'm going to do a couple things. We're going to do some Fibonacci arcs, but so $530.64. It'll lock on down to $3.31. Okay. Oh, come on. 331. Okay. So, overall, I want to establish the confidence of these candles and how they interact with these Fibonacci lines. High level, not very impressed, but I'll show you exactly why. So we have perfect support here for this red candle. We have some choppiness right here. Good test of support, falls through, just falls through, semi, not even really resistance here. So Fibonacci arcs, for the most part, are not going to be a reliable indicator for us. So I'm going to remove that. Okay. And we're going to do the good old-fashioned support and resistance. So I want to look here. 331 is our low. Did it snap? 331. All right, so that is our all-time low support. And this looks like right there. This looks like absolute beautiful chef's kiss, 10 out of 10, 100% perfect. So amazing support, 10 out of 10 support, 10 out of 10 support, 8 out of 10 resistance, 10 out of 10 resistance, 100% beautiful support, beautiful support, beautiful support, like back-to-back nines here. Amazing 10 out of 10 support, 10 out of 10 support, 10 out of 10 resistance, 10 out of 10 support. So if I was a betting man, I would say watch for 36. That is coinciding with our 38. Very cool. And let's just check some stuff out. We're not gonna test. We're gonna see all the different areas of support and resistance. So that's one. That's two. And I think there's that one, and yeah, this one. Okay, so it's no surprise really that this candle is under a lot of pressure at the moment. There's like 3 levels of resistance here, plus there's this one right here. I think there's a decent chance we close under 44 for the end of August, potentially 36. I think where we want to be extra cautious is actually over here, end of 2024. What has to and needs to happen is we need a very clear breakout through all this mess and traffic upwards. Now, what does that look like? Good question. We do have a potential. What did I just do? We do have a potential channel right here. This one that I just drew, I'll make it a different color so everyone is on the same page. Within the perps, decent chance we stay within here. And the optimism comes because we're kind of in a bull flag on the month. And what that means is we have our flag here, and I'll make it a different color because so many different colors. We'll make it this color and we'll make it super thick. So that thick pink. Then we have our flag here, which now that I'm drawing this, I mean, yeah, we can go there and there. So we're in and I'll make this nice and pink as well really quick, and you'll see exactly what I'm talking about. So we've got our bear or our bull flag, which is typically bullish. So we have our flagpole here, this upline, and then here's our flag. Again, if we fall out of this, I think there's a decent chance we go to 36, potentially under. But I'm somewhat optimistic about this company because if you have a home, property, car, boat, any type of insurance, pet insurance, life insurance, home insurance, insert a blank insurance, everything's gone up. and this is no exception. Um, this is not the worst looking stock. There's a lot of people shorting this, and I just, dang it. There's a lot of people shorting this, and I don't know how to feel about it. I think they may see what we see right here, and if they can get it below 44 for the month, there's a good chance they can get to 36. Decent chance they can get it back within this nice, beautiful channel, and I'll just make it dashed. So, yeah, waiting on the side, totally valid. Um, it's just, we're getting into the winter months, crazier weather, ice, snow, sleet, hail. So more money for them, more opportunity to charge more, et cetera, et cetera. Risk goes up. People are driving, commuting in the uh, elements. So I'm iffy. I don't really typically follow insurance stocks, so I'm not very versed in how they operate. But yeah, I think this is a wait and see for me at the moment. Um, I do just want to look and see really quick. They did have earnings earlier this month, August 7th. So they had a loss, good revenue. What I want to see here is if what they're guiding for 2024. I mean, they're honestly on the track to kill it. They're already at 854 million. And I mean, the stock is like doing so well. It's up, gosh, over 1,000+%. Um, and the thing about stocks, especially if you've been in the market for a while and look at patterns on the larger time frames, the monthly time frame, yearly time frame, typically there's gaps or areas a stock will retrace to. And if this company is solid, as it could be, on paper it looks solid. Um, it could work its way back up. I don't like these auto-generated articles. Typically Zacks. Okay. No information. Very, very annoying. We'll look at the call and we'll just control F it to find guidance. All right. Presentation, yada 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 yada. There's no word of guidance. Okay. 2025? There's no 2025. Okay. Okay, still nothing. Okay, we expect to remain opportunistic for the back half and growing dark channel. Come on, baby. What did you just do? I was reading. Uh, to drive profitable growth, right? Yeah, they're on the right track. Wow, partnerships grew 120%. So my progress, yes, yes, yes. Okay. Q&A, okay. Okay, Q3 is looking good. Okay. marketing costs. So I know you guys talk about repeatedly your expectation that marketing costs would go up. Okay, so they are spending money on reducing competitive environment, which has a okay. So they're what I'm gathering by just scheming is they feel confident and comfortable with what lies ahead in terms of insurance claims. Uh, okay. Uh, okay, so here's the people that do the business with. We have the vast majority of our customers download the app. Did he not even answer the question? Younger customers, how many of your customer okay, how many of your customers download the app? Okay, so they weren't asking specifically how many of your customers are younger. So, I think I like this company really. I mean, this is just absolutely bananas growth. 455 million to now 854 million. Negative income is negative 83, but watch this, and I'm going to show you. It's because this right here, that equates to their 83. Look how much better they're doing now. So Q1 last year, they had negative 40 million. Q1 this year, negative 6 million. Huge. That's a 34 million plus positive increase. Q2 this year, negative 7.8. Q2 last year, negative 36. 29 million positive. So as we go on to our next quarter, which will probably be discussed in September, October, November, or December, this net income will go from negative 80 million down to probably negative 48 million. And again, we'll probably see them become profitable 2025. My opinion. So really, I like this app, or I like this company. I like this company. Um, Going back up, I'm gonna go back to our institutions really quick. I want to see if Alexander has. Let's see. Here he is. The founder of the company bought more shares earlier this year. That's pretty good. If a founder is buying the stock, that's really good. I'm impressed. Okay, let's look at this part. Well, we can see this part. Well, let's just check. No. Okay. CAO, CFO. Okay, so the founder is buying. Honestly, I kind of like this. I'm gonna wait until the end of the month, but I'm writing this one down because I'm kind of excited. I think I like this. I mean, institutional ownership went from 34 million to 68 million. I don't know who's shorting this, but I mean, the company went from 455 million to 854 million. So, and look what they're guiding for next year, 181% earnings per share growth. That would put them profitable EPS. Profit, yeah, profitable. Earnings per share is going to be profitable. That doesn't mean they will be profitable, but I think they are likely going to become profitable. So, I kind of like this. I wonder if I can access their 10Q really quick. Okay, let's see. I personally just want to see um, their spend. And I understand this is a little bit more deeper than I usually go. I don't really want to down. I just want to look, but I guess I'll download. Let's see what we got here. All right. Here we go. Whoa, 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 whoa. Okay. Wow. I mean, they spent 185 million more in operating than they did last year, and they did almost 5 times better on net income. Crazy. Okay, so that spend is there. Uh, okay. Okay. I wonder, I'm gonna do I want to see if there's any shares locked up. It doesn't look like it. Um, buybacks. Buy. Um, I guess not. I don't. Let's see. Yeah, I don't think there's any buybacks announced. Okay. Whoa, what? No, no, I'm not. I thought I saw something. Okay. So I think I like the stock. I'm gonna wait and see if it gets down to our 36 level. If you made it this far, consider subscribing. I'm gonna go ahead and check and see what my insurance quote is, and I'll show you guys in just 1 second. All right, so I did complete the insurance quote form. Comparing this to my current Progressive insurance, I'm actually, let me see. I'm actually paying, this quote right here is actually a bit more for the same coverages, unfortunately. If I do remove comprehensive and I remove uninsured, I do get $97, but quite a bit. Um, it's quite a bit more if I try and match what I'm getting now. My actual insurance did go down 9 bucks a month, which is pretty cool. No, I lied. It went up for some reason. So I'm not sure why, but I'll have to check. Anyway, I pay 133 a month. If you made this far, consider subscribing. Thanks for watching. Have a great day.